What's up, guys? Happy Friday. Look who we got. You guys know the rules. Kicking it off with a quick swig. Peanuts in the building. You know what that means. But my friends, happy Friday. Welcome back to another Dividend Happy Hour. We missed last week, so it is so good to be back with you guys for this week. We're gonna have a lot of fun tonight. And I hope you guys all had a great week. I know I sure did. It was a very interesting week on the market, and today was a very interesting way to end the week. If we jump over here, let me actually pull up my spreadsheet. There you go. Switch screens. There we go. Now we're rocking and rolling. If we jump over here, let's take a look real quick at what went down today. This is probably one of the best days on the market I've had in quite some time. I saw a nice little gain here of 1.6%, up almost $1,100. And you guys, as you know, as I'm sure you know, these last couple of weeks, it's been like a lot of this. It's been very wavy these last couple of weeks. And I saw my portfolio from like mid-May to now. I think last time we talked, last time we had a live stream, I was at all-time highs, just over 70K. I saw this get down to 67-ish thousand dollars. So in a span of a couple of weeks, we lost about 5%, about 4.5% of the portfolio. And now, I mean, really these last handful of days, we've made that up. So, or have almost made that up. So we're almost back to all-time highs again. Just a very interesting couple of weeks on the stock market. And I apologize, guys. This might happen for a little bit. But anyway, enough nonsense, guys. Once again, welcome to the Dividend Happy Hour. It looks like there's about over 100 of us in the stream right now. And why don't we kick this thing off with a quick cheers? So grab whatever it is you're sipping on tonight. And I assume you guys got your Coca-Cola. I see a little Celsius, probably some other energy drinks out there. I'm personally sipping on a little like 0-calorie passion fruit lemonade, a little Tropicana, good stuff. But I don't know, guys, here's to you. Thank you for tuning in with me tonight. I'm sorry that we missed last week, but once again, we're going to have a fun stream tonight. So here's to you. Thanks for hanging out with me tonight. And also here's to those dividends. Here's to the pursuit of that sweet, sweet cash flow, which is what's really bringing us together tonight. But more so than anything, cheers. Here's to you guys. And also, I've got 3 questions for you, or 3 things I want to know in the chat. But before I do, and before I forget, I want to wish a happy belated birthday to my friend Adon here. He was really upset that we didn't stream last week because it was his birthday. So I want to wish a happy belated birthday to you, Adon. I hope you had a great birthday. And I'm sorry we missed you last week, but hopefully this makes up for it. But real quick, guys, let me know a few things here in the live chat. Number 1, what did you buy this week? Which stocks did you add to your portfolio? I want to know which discounted dividend stocks you picked up. Number 2, I want to know what you're sipping on tonight for the Dividend Happy Hour. What did you bring to drink? And number 3, did anything cool happen in your guys' portfolio this week? Did you hit any new milestones? Did you officially reach 100 shares of SCHD? Are you now bringing in $200 per month of, I almost said $200 per month of annual income. Are you now bringing in $200 per month of income? Excuse me. Anything cool that happened to you guys this week on the stock market in your portfolios? I want to hear about it here in the live chat. Let me know everything that's going on there. We'll give some shout outs, and let me do a quick roll call. Let me see who all we got in the building tonight. A lot of the usual suspects, I would assume, like Pat in the building. Pat S., good to see you, my friend. And I got to give another quick shout out to my man, Paco. What's up, senor? I don't know if Paco's actually watching. Paco's my friend here at my apartment complex that I live. So him and I are amigos. He's teaching me Spanish, which has been fun. And senor, I hope you had a good day, and thanks for tuning in. We got Wilfredo, good to see you. Striper Kid, happy to have you. Rockin' 911, good to see you. We got Lucas in the building. Great God, Nix, what's good in the hood? Love it. Kevin's here, Kevin Mendoza. We've got my man, the Tortoise, the one and only Tortoise Investing. Good to see you, man. Shamizzle in the bizzle. We got Michael here. Good to see you. Paolo, greetings from LA. Nice. We got Rolly. Yeah, there we go. X to the what? X to the who? We got X Dividend Dad in his house. Good to see you, man. X, go and give it to you. F waiting for you to get it on your own. Y'all gonna deliver it to you. Let's see who else we got. Chris, good to see you. We got Matt Money. There we go. We got David. Very nice compliment. Ryan is a wealth of knowledge. I don't know about that, my friend, but most of my stuff is just gibberish, but I'll take the compliment. Thank you. I appreciate that. And I appreciate you tuning into the Dividend Happy Hour. I'm guessing this is your first time tuning into the live stream. And for all of you guys, in case this is your first time here to the Dividend Happy Hour, we typically do this every single week. We missed last week. Some weeks I just won't be around, but otherwise we do this, just counting this happening every single Friday night at 5 p.m. Pacific time, 8 p.m. Eastern time, unless otherwise noted. But yeah, we do this Dividend Happy Hour every single week. And thank you guys. Tortoise, thanks, dude. I really appreciate that. You are too kind, my friend. We got Charles here. We got El Dynamico. Antonio, what's up, man? Will's here. There we go. Yeah. Adon's got it right. Shots for Peanut. There we go. Okay, let me keep scrolling here. We got the Lean Mean Dean Machine. Good to see you. Tony's here. Wiffle Ball Tony. Hey, yo, Tony. Hey, what are you doing, Tony? Hey, happy to see you, Tony. JJ, congrats on breaching 70K, even if it was short-lived. Thank you, man. We'll get back there. No big deal. It's all good. But thank you. We got Gorilla Nurse having a Diet Dr. Pepper tonight. Love it. CA's in the building. We got Ingo McLean. That is quite the name. Ingo, good to see you, my friend. Fabio's here. What's up, Fabio? We got Jeff, Michael. Who else we got here? Tyrone in the building. Sipping an old fashioned. Love it. Love it. Love it. Yeah, ex-dividend dad. Did we miss last week because you're married and tied down? Yeah, exactly. Me and my lady went out and had some fun last Friday night. She usually works. So she works at one of the beach clubs down on the strip here in Vegas. And so typically on the weekends, she's usually working Fridays, Saturdays, Sundays. Those are like the busy days there during the summer. And, during this time, if she's not working or whatever, and we've got an opportunity, we'll go out and have some fun on Fridays. So yeah, that's what we did last week. She's working right now though. So, and I missed you guys. I missed streaming last week. It's always interesting too, like coming back to doing this after having a week off. And this is probably going to sound silly, but you going into it, like you feel a little bit rusty, I get a little bit of stage fright after taking a week off. Am I going to bomb? Am I going to suck? Do I still got it? Not that I ever had it in the first place, but there's a little bit of I can feel a little bit of rustiness. So nice. Yeah. So ex-dividend dad bought CRM. I would imagine, I'll be curious to see how looks like a lot of you guys actually just scrolling through the chat. I see CA's bought CRM, trading with Travis. Good to see you, man. Also shout out Sir Dude Bro, man. Happy to see you, man. Let's see. Tony bought a really nice position in CRM. So that's Salesforce, by the way, guys, in case you are not familiar with it. And Salesforce experienced a pretty substantial drop in share price. We can see that they really fell off a cliff. Let's zoom in here. So just in the last month, they're down over 14%. But even with that, they're up 7.5% today. So a big sell-off after they reported their quarterly earnings, which I didn't really get too much into it. But I mean, interestingly enough, subscription and support revenue was up 12%. So this was probably, let's just look at these, actually take this opportunity to dive a little bit into Salesforce, because it is seems like kind of a hot topic right now. So, okay, here's the overall numbers. They beat on earnings, beat on the bottom line by 7 cents. That's good. Missed on revenue by 20 million, but their revenue is still up almost 11% year over year. So a $20 million revenue miss on $9 billion is really nothing crazy. That's not even like a 10%. That's like maybe a 1 or 2% miss, somewhere in that range. What else we got here? What's happened? So I think this article here tops earnings expectations if you issues soft guidance. So actual consensus. So the full year revenue guidance. Okay. That's still not bad though. Plummets on weak Q1 sales weak Q1 sales. That's that earnings miss. That's really not bad though. And then the forecast. So looks like second quarter earnings are looking to come in a little bit lower than Q1. That's still fine too. Whatever. That's a crazy reaction. Maybe what has Salesforce done? Maybe they'd have it seen a pretty big run up otherwise. No, not even. We're only up 5% in the last year. That's really interesting. You know what? While we're on here, sorry guys, I'm stuck on this. I just want to just take a quick scan through the financials. Extremely profitable company, obviously. Net income, yeah. Let's see. Earnings per share has kind of been interesting. Right here, right? So 2022, 2023 were kind of odd years. So well, actually, I don't know. Looks like actually 2021 and 2024 were kind of the odd years. Interesting. Looks like I see a decent amount of share dilution, issuing a lot of shares over the years. But this company's still growing, so that's probably, or seeing a lot of growth, so that's probably natural. And they have negative net debt, 12.5 billion total debt, negative on a net basis. And I'm sorry about this glare, guys. It'll go away here pretty soon. And yeah, they're bringing in 12.8 billion of free cash flow. Wow. So I think good pickup. Yeah, I think why not? Why not buy the pullback? Oh man, I'm sorry, guys. I know this is probably going to bother some of you guys. So anyway, CRM looks like pretty decent buy. I might have to make a video on this one, or really spend a bit more time with it, because CRM is now a dividend payer. They're one of the few tech companies that recently announced a dividend. The yield's not very high. Starting yield is only 0.18%, but from the looks of it, they had a lot of the makings to be a pretty great dividend growth stock. So we'll see what happens with it. Okay, let's keep going. I see McDonald's. That's another good looking buy. Realty Income, yeah. McDonald's has also seen a pretty decent drop. Tortoise also picked up some Salesforce. Nice. There we go. This is cool. Completely sold out of everything and paid off my Jeep. Now 100% debt free. And I correct me if I'm wrong on this, but I think your mortgage, you're mortgage free too, right? Like that includes mortgage. I think I remember you telling me that at one point. And that's awesome. Good for you, my friend. Let's see. Chris went on a nice shopping spree. I have been waiting for this. So Chris here started a couple new positions. I would not be surprised if one of them is CRM. So far we see VU, SCHD, UPS, Realty Income, Visa, Johnson & Johnson, Vici, Google, and plus additions of 2 stocks. So, and let us know, man, what's the big reveal? I've been dying to know what these 2 stocks are. Which ones did you add? Yeah, I'm sorry about the lighting, guys. Lo siento. Let's see. Gorilla Nurse, my dividends bought me my first share of Smucker's SJM. I thought, I know I briefly mentioned Smucker's in my discounted stocks video. What's this company done? There's some good discounts out there right now. The market is in such a weird place, but like there are some, individual stocks within all of this that are really seeing some serious pullback. So in the last month, Smucker's is down 2%, not bad. Okay, nothing crazy. Year to date, they're down 11.6%, and it looks like it's been a little bit of a rebound here. So it's popped a little bit, I guess, this week, up to 3.5% today. In the last year, though, they're still down about 24%. Interesting. Yeah, solid company. What did they do? So they were, February, March, April, May. So they should have reported earnings. They should have reported. When are they reporting their next earnings? Oh, in June. Okay. Estimated. I'm just seeing their last announcement was February, end of February. So I figured February, March, April, May. Maybe they'd announce them by now. Okay, it'll be interesting to see what happens with that. Yeah, I see some more McDonald's, Deere and Company, Visa. Striper Kid picked up some Intel at $30 per share. Yeah, we'll see what happens with that one. Last time it went down to that level and ended up shooting back up to the mid 40s. So we'll see what happens with it. Personally speaking, I'm glad I sold out of Intel when I did. I think I sold it about $44 per share for a slight little gain. Yeah, there we go. Some more CRM, Vici. And this one's interesting too. Pizza. This is Papa John's. This is another one that's seen a pretty, let's go back over to the screen. Bear with me here, guys. Sorry. This is another one that's seen a pretty decent pullback. And Russ talked about Papa John's in one of his recent videos as well. So yeah, they're at their 52-week low right now. Down 30, almost 34% in the last year, down 26% just in the last month. What do you guys think about this company? What do you guys think about Papa John's compared to some of the other, gosh, I'm sorry, guys. Compared to some of the other like pizza companies out there, namely Domino's, obviously. Even throw like Yum Brands in there, ticker symbol Yum, YUM, which owns Pizza Hut. Where do you guys think Papa John's fits in the midst of those? I think a lot of you guys will say Domino's is going to be the better play. Certainly the more expensive play right now, but potentially rightfully so. So Papa John's, though, in the last month, so May 9th is when they reported earnings. Beat on the bottom line, missed on the top line by, looks like maybe a 2% year-over-year decline, but maybe a 5%-ish miss, a little bit more than 5%. Okay. Global-wide restaurant sales were down 1%. Interesting company. And I was actually kind of scanning this one in the last couple of days. I think I remember, yeah, sales have been kind of interesting. They really haven't budged much in the last 10 years. But I mean, interesting. Look at the difference between the revenue chart though and the gross profit chart. You can just tell by looking at these that this company is becoming more profitable over time, and we'll see what that looks like. So yeah, I mean, gross profit margin has definitely come up, 20% to now 30%. So a nice little 10% increase there, but still, as you move further down the income statement, the operating margin is about level. I mean, it was kind of questionable here 2018 in 2019, but otherwise it's been pretty stable there. And net income, the very bottom line here is, I don't know. I would say this one doesn't really excite me too much. I mean, 2021, I guess really 2020 to 2020 to now, the earnings per share has been decent. Decent growth there. Overall, I'd say trending in the right direction. The dividend growth has been pretty nice. They've more than tripled the dividend in the last 10 years. But look at this though, guys. This payout ratio is very interesting. It's pretty low going into 2018, but since then, that's pretty crazy. Pretty crazy right here. So yeah, 90 cents. Okay, so in 2018, they paid it 90 cents for the dividend, only brought in 8 cents on earnings per share. And then fast forward to 2023, 176 for the dividend. I guess, actually, no, that's covered. Never mind. Excuse me. Never mind. But anyway, that's a relatively high payout ratio. I would imagine the debt's going to be going up too. Yeah, so debt's going up on a net basis about 935 million against, only about 100 million in free cash flow. So you're looking at a near 10 net debt to free cash flow. It's about 10. So I don't know. I personally think there's probably better options out there than Papa John's. Just a quick little look-see. Yeah, this is a good question here. Guys, I'm so far behind in the chat. Sorry, I'll catch up. Did you pull the trigger on any Lowe's this week? I bought the dip. No, I haven't bought any Lowe's. I've just been steady buying Starbucks. I added some more Starbucks this week. But Lowe's is starting to look pretty. Lowe's is starting to look pretty attractive. I did read earlier this was the 5th consecutive quarter because they put out their quarterly earnings this month as well. And I read earlier today that this was their 5th consecutive quarter of reporting. I think lower comp sales, so something like that. But anyway, I mean, when it seemed like home prices, not home prices, Mortgage origination, so people buying homes, has been going down, and so that's going to have an impact on Lowe's for sure. So, and just to put it in this kind of perspective, so let's say you're going to sell a home or buy a home. Let's say that you're selling your home. Some people, when they sell their home, they'll put things in there, they'll freshen it up a bit. Maybe they'll put in new appliances. Maybe they'll do things to make it more attractive to the purchaser. And if there's new appliances and stuff in there, you could raise the sell price a little bit more. They might try and sell it for a higher price because of that. So people aren't doing that as much. People aren't selling their homes as much. And also people aren't buying homes as much either. If you're on the other end of that, maybe you buy a home that doesn't have brand new appliances in it. Well, maybe that's one of the things you do when you first move into your new home. But since people are still buying homes, just not as much. So anyway, that's, long story short, that's going to have an impact on Lowe's. Hopefully all that made sense. But I also did see that their pro segment, so selling to, professional contractors and handymen and stuff like that, the sales are increasing there, which is good. That was one thing that Home Depot did and does have an advantage over Lowe's in, and Lowe's is making some good strides there. So that was good to see. Oh, that is so good, guys. So freaking good. The only thing it's missing is a little tequila, a little reposado, but a couple weeks now, guys. This is episode 97 of the Happy Hour. So I told you guys, once we hit episode 100, I'll have a margarita. I might even have a couple margaritas on that stream. So we'll make that a fun stream. So we got a few more weeks for that. Let's see. Let's keep going. Ooh. All right, guys, let me keep going here. I'm about actually 13 minutes behind in the chat. So I apologize if I skip over some of your guys' comments. There we go. And I want to give a quick shout out to my man here. This was actually my travel agent. He helped me me and my fiance book our honeymoon. So if you guys are ever planning trips, this is the man. Let's see. It was almost entirely the guidance talking about CRM. Yeah. Wow. I'm definitely behind. Ultra Runner, man. I was thinking about you the other day. I was thinking, where's Ultra Runner been? Because I know you're still pretty steadily active on Twitter. Which I'm not. I've really not been good on Twitter. I really just don't like it, if I'm being honest. I really do not like using that platform. But yeah, no. So I was thinking about you, and hope you're doing well, and I'm happy to see you in the stream. Let's see. Okay, Chris, man, you still. There we go. Nice. So Chris, the moment we've been waiting for, he added NVIDIA and today picked up Microsoft. Very nice. Good stuff, man. Those were the big two, huh? Good job. Kevin here. Kevin, I'm going to hold you to this, man. To celebrate the 100 stream, I'm going to drink a Mickey's 40 ounce. Nice. Sip of 40. There you go. That'd be funny. Could you guys imagine just pulling up to the stream with like an Old English? Let's see. Just keep going. With Papa John's, it's going bankrupt. It's so dang nasty. I actually don't know if I've ever had Papa John's. Usually when I don't eat pizza too much anymore. I absolutely love pizza. It's one of my favorite things. I could eat it every day, but usually when my wife and I go to we go for pizza, we'll go to either, there's a place around the corner from us called Brooklyn's Best, like it's a local place to Vegas, really freaking good pizza. So we'll either go there, or I haven't taken my wife there yet, but there's another really good place here in Vegas called Metro Pizza that Wayne, I don't know if Wayne's probably not watching, but Wayne Nichols, if you guys watch his channel at all, definitely check out his channel if you don't already watch it. Wayne Nichols. Wayne and I, when we get together and hang out, we'll go to Metro Pizza. It's pretty bomb, pretty good stuff. I get this like stuffed pizza that's stuffed with Like it's more like a calzone than it is pizza, to be honest with you, but it's got like 4 different kinds of cheeses in it. You've got obviously mozzarella. You've got some, maybe not 4, maybe there's like 3 cheeses. There's like mozzarella, some other kind of cheese, and then oh my gosh, and then ricotta. They just stuff that thing with ricotta, and that's like my favorite part. And then you get sauce on the side. Really bomb. Okay. Lynn, how much did you get paid by Starbucks? So I think my dividend came in actually a little bit higher than anticipated. So and I just put out a video talking about my monthly dividend income. I think in that video I said it was going to be about 33-ish dollars. But my actual payment came in just above $34. So a little bit higher than I expected, which was really cool. So really great way to end the month. So, and how did you guys do? Did you guys all have a good month of dividend income? How was May for you guys? What were some of your highest what were some of your highest payments in May, and how's June looking for you guys as well? Is it going to be a good month? Let's see. I'm catching up in the chat now. Nice, Shannon. This is a cool little milestone. I crossed $2,000 per year. That is awesome. Congratulations, Shannon. Good job. Yeah, I still see you guys talking about buying CRM. That's definitely a hot commodity. Let's see. Is this actually a good question? So not a dividend stock, but what's your opinion on Adobe? I've never really looked into the company's financials, but I can say I use Adobe products religiously. I use Lightroom, I use Photoshop, I use Premiere. That's what I use to edit my videos, and I've done so for years. And the thing about just a little bit of like background info on using these products. So let's look at Adobe Premiere, for example. That's a video editing software. The switching costs are pretty low. Like it's obviously not like expensive at all to switch and start using a new software. But the thing is, people don't do it a lot. Once you have your software that you know and you love and you're familiar with and you know your way around, you don't want to switch. You don't want to have to go and learn a whole new software. So typically when people get married to their platforms, whether it's Premiere, whether it's which one's Apple's Final Cut or DaVinci Resolve, which is a free one. People typically pick one and learn it pretty well and stick to it. You stick with what you know. And so with that said, I love using Adobe products. And let's take a look at the just look at the financials real quick, because I've never done so. They're obviously very profitable. Let's do this. So crazy gross margins, almost 90%. That's like almost Visa levels of gross profit margin right there. Operating margin, a bit lower, but still crazy expansion across the last decade. Excuse me, guys. I'm sorry. Crazy expansion across the last decade. The net income margin right here has gone up tremendously as well. So all of it looks really, really good. I would say, just looking at the income statement, this is a very, very great looking company. And let's see. I mean, their cash position is steadily growing, definitely trending up. $6.8 billion of just cash, and negative only $4 billion of total debt, which means they have negative 2.7 on a net basis. And I bet this company is a just cash flow printing machine. Yeah, this is a great looking company. Really good. So, I mean, all across the board, I think this is looking fantastic. I wish this company paid a dividend. At their 52-week low, though, or close to it. Why are they down so much year to date? They're down 25.5%. I mean, I guess that's the risk, right? Which AI companies can come in and edit the videos for you, or can edit the pictures for you, or obviously generative AI when it comes to photos and actually even videos as well. I don't know. I can't predict at this point how that's going to play out. Let's see. Let's keep going. Ooh, Kevin Burgess. Good question. Have you ever researched Lamb Weston? I started looking into them today. Might be interesting to follow them. Let me just take a look. I've heard of the company, but I don't think I've ever actually looked into it. Are they in the industrial sector? No, it's consumer staples. Okay. Operates through 4 segments: global, food service, retail, and other, frozen potatoes, commercial ingredients, and appetizers under their brand, as well as various customer labels. Okay. Sales look really good. Look at this revenue chart. That's nice. Let's take a look on the website and see kind of what's going on. It looks pretty delicious so far. Oh man. Oh, these look good. I love potatoes. Love me some French fries. Okay, let's go to, so I guess it's just their brand, right? Let's go to all products. Okay. I'd want to learn. Maybe there's you know what, probably a better, so I get the gist. They sell potatoes. Okay. Maybe there's like an investor presentation that will tell us who maybe some of their customers are. Maybe a little more insight. Earnings. No, don't want that. Where would be ESG? I don't want that. Let's just see if maybe, okay, that's the press release. Come on. Investor Day. This is what we're looking for. It was right in front of me. Sorry, guys. Let's take a spin here real quick. Okay. I'm definitely going to circle back to this one and spend some more time with it. I just want to see, yeah, okay, margins are growing, sales are growing, EBIT is growing. Wow. Who are they spun off from? This looks really interesting. I want to see, I'm really just going to quickly scan through this. I'm sorry, guys. I want to see if maybe it'll give us some insight as to who they sell to. I'm gonna probably gonna download this presentation and go through it. Okay, I'll come back to it, but I'm gonna download this and save it. We'll do. Sorry, guys. I have a folder in my iCloud that's for like, I just download 10Ks investor presentation. So this is Lamb Weston investor presentation. And then what I'll do is when I do my cardio, so like when I go walk on the treadmill or whatever, I'll just use that time to look into all this stuff, read through 10Ks, go through these presentations, and it makes time go by like that. Such a great way to kill 2 birds with 1 stone. But anyway, let's go through some of the financials real quick. The first thing is like, okay, I can wrap my head around what this company does. I understand it. I understand how, for the most part, at least just at this quick glance, I understand how they make money and how they drive sales. So that's like item numero uno. That's always where I try and start. Do I understand this company? And sidebar, someone, maybe it was one of you guys the other day, left a comment asking if I'd ever heard of or looked into Booz Allen Hamilton. I'd never heard of the company before. It's ticker symbol BAH. And I looked into the company. It looked like a fine enough company. Like their sales were growing. I think that their profits were going. The margins were steady. Nice dividend growth company. But then I looked at the company profile on Seeking Alpha, just basically explaining, what this company is. Totally over my head. I could not figure out what this company did. It seemed like they do everything and anything. So it was a bit complex for me. And so at that point, I knew it's like, okay, I probably have no business looking further into this business, at least at this point, because right now I just don't understand it. There's more simple companies out there that I could probably spend time diving into and considering, like potentially Lamb Weston here, who sells potatoes, which is very cool. Okay, so let's look at this. We're gonna jump back over to the screen. Um, Margins are growing, so that's really nice. Gross profit margins growing at least. Well, it's kind of been all over the place, but whatever. Looks like, yeah, okay. Operating margins steady, growing a bit. This is the net income margin, excuse me. Nice. This is looking pretty good as well. Interesting. So this earnings chart's very interesting. So it goes up since 2019 and then making its way down. But then 2023, it really popped. Really like an anomaly year as far as earnings per share. So I'd want to figure out exactly what happened in 2023 to cause that. And the payout ratio has been kind of interesting too. Since 2017, which I don't know, I guess they maybe this maybe was when they were spun off from whoever they were spun off from. I don't still don't know quite yet who that was. I'll find out at some point. But maybe they were spun off right here. And since then, the payout ratios increased until 20, and not bad. Like this is still reasonable, but this is not a trend that you ideally would want to see. And it peaked at about 69. But then once again, with this huge earnings year, the payout ratio dipped to 14.5. So that's kind of interesting. Yeah, the dividend growth in this time period has been really nice. They've tripled the dividend in the last 7 years. So cool. So there's definitely some good things about this that I like. 3.8 billion of net debt. I mean, they're bringing in 1 billion of net income, negative free cash flow in 2023. I don't know. I would definitely need to spend some more time with this company. It's got some good aspects to it. Decent. This is your classic dividend growth stock, like low starting yield, nice double-digit 5-year growth rate. So I don't know. I'm definitely going to, where did I put that there? Maybe I was following it on my watch list. So I have like a running watch list of close to 300 different dividend stocks. Pretty much any dividend stock I come across, it goes on that watch list just to see what things are doing. So anyway, Kevin, thanks for the suggestion. I'm gonna look over that presentation and see what I can find out. Oh, so good. Okay. Let's see. Wow, nice. This is a cool little milestone. Timo officially crossed the 100 share mark with Realty Income, now at 101 shares. That's awesome. Not finished buying. Good job. This is crazy. Look at this, guys. June for Ultra Runner is going to be a $1,600 month. That is awesome. That's crazy. I cannot wait to be at that level. Good job. Let's see. We got Adam in the building. Adam's another one of my friends here in Las Vegas. So Adam and I met up at Juan Slayman Fajitas a couple weeks ago. It was a lot of fun. And definitely check out Adam's channel if you guys haven't already. He's the Rational Investor. Definitely go give him a watch. Adam is spilling some really good knowledge, and I learn a lot from watching Adam. So Adam, thanks for the good content. You guys definitely check it out. He's a good guy. Good guy and really, really smart man. Let's keep going. Oh, gosh, here we go. Of course, this isn't the same guy that brought it up, but oh man, of course. Crazy. Okay, so Weston mostly sells to restaurants and institutions. So potentially like one of their competitors could be like a Cisco, for example, right? If we go back, let me actually see, I probably should have done this. Let me see who Seeking Alpha has their peers. So Campbell Soup, I'm not familiar with this company. Smucker's, Conagra, and then Carey Group, which I'm also not familiar with. I want to like Cisco too. My uncle actually works for Cisco. What's their ticker symbol? Cisco. I think this is it, right? SYY. I really want to like this company more than I do because I mean, I just feel like you can't go to a restaurant and not see something from Cisco. But every time I browse the financials, they never really jump out to me. Yeah, very low, very low gross margins. I just look at this and I think, why would I invest in Cisco when I can just put more into Visa or something like that, you know? If I thought that way though about everything, I probably would only own one stock. So yeah, the payout ratio too has been kind of interesting. Sorry, I'm just like thinking out loud now. Earnings, there, you know what though, the earnings per share really hasn't been too bad. 2020, they really took a hit, and they've been trying to rebound it since. But 2014 up to 2019 was really good, and it looks like they just now in 2023 have surpassed the 2019 peak in earnings per share. So it'll be interesting to see what they do from here. During this time, though, to their credit, they continue to raise the dividend. You know, couple rough years as far as the payout ratio goes, where they were paying out more than they earned, but it's coming back down now. 2022, it was a lot lower than this, and it seems like it's leveling out. 2023 down to 56%, which is not too far above where it had been in the past. Like the sweet spot was right in here, 2017 to 2019. So you can see it start to head back down in that direction. This might be one I need to keep an eye on. Because I do like it. I do like the idea of what they do, rather. 12.5 billion of net debt. Okay, so their net debt to free cash flow is probably 10, which is a little bit high for my liking, but still it's one I will keep in the back of my mind. So let's see. Okay, Lamb Weston is a spinoff of Conagra. Okay, good to know. Good to know. Shannon, thank you too. Thank you guys. Lamb Weston sells to restaurants and fast food chains, including McDonald's and KFC. Owner Yum Brands, who I really like. I actually really do. I really like Yum Brands, and that's a company that I've kind of been considering lately. Not super seriously considering, but I like it. The more time I spend with it, the more I like it. To grocery stores and mass market retailers. Okay, good to know. Thank you, Shannon. Yeah, thank you guys. Conagra. Good to know. Stonked up, my friend. Congrats on the wedding. Haven't tuned in for a while. Well, thank you. I really appreciate that. Yeah, thank you so much. And I'm happy to see you in the stream. I hope everything's going well for you. This is a cool little milestone too, guys. Victor here got 100 shares of SCHD. Nice. Very nice. That's such a cool milestone. I'm working to get to that by the end of the year. My goal by the end of 2024 is to reach 100 shares. And I know I'm going to do it. I'm at like 75 shares right now. So, let's see. Well, what do we have here? That's my Zal voice. Let's see. What about snow? Is that Snowflake? If so, this one's probably going to be like way over my head. Yeah, it is. They're not even generating like their negative net income still. So this just this automatically wouldn't be one that I'd be super interested in. And you know what? We'll go back over here actually. Show you what I'm talking about. So revenue and gross profit obviously are growing really well. Net income is still negative. This is just a business that's very early on in its like life cycle, still very heavy in early growth stages. And this is pretty common to see with a business like that. You won't see this type of bottom line with a business like Procter and Gamble, who's more established, more mature, and more stable. So a company like Snowflake is just spending a ton of money to grow, which is why their earnings are negative. And if a company's not generating any earnings, they're not going to be paying a dividend. And that is one of, as you guys know, that's one of the things I want to see. I'm a dividend guy. And that's not to say, I actually want to make a quick distinction while we're on the subject. When I say I'm a dividend investor and I do dividend investing, that's not to say that I invest in stocks solely for the dividend. For me, what it means to be a dividend investor is just in the same way that you'd want to see if in the same way that growing sales is a part of your must-have criteria. For me, the presence of a dividend and a growing dividend is one of my must-have criterias as well. So I don't look to buy a stock just because it pays a dividend. I look to buy what I think looks like a great business and a great company that will grow across a long period of time that I can foresee growing, that also pays a dividend. And hopefully that makes sense. And I think it's possible that maybe this is why one of the reasons why dividend investing gets so much backlash, because people hear dividend investor, they hear dividend investing and they think that person's just chasing yield. They're buying stocks just for the dividend, which certainly does happen. Don't get me wrong. It's not something I try and do. Maybe when I first started, yeah, because I didn't know any better. But now as time has gone on and I've kind of learned the ropes a bit more, now when I say dividend investing or claim dividend investor, it's still buy great stocks, still buy what I think are great businesses that also happen to pay a dividend. Hopefully that makes sense. And let me know if that resonates with you guys as well. I want to know your thoughts on that. Daniel says, what's up, bro? Is this live or pre-recorded? This is live action, my friend, raw and uncut. Red, white, and me. That's how we do it here on the Dividend Happy Hour, for better or for worse. Let's see. Yes, I am from the United States. I'm over here in Las Vegas. There we go. SLV, good evening, Ryan. Kinder Morgan KM is one of my larger holdings since energy is an essential and it's growing. Yeah, I like Kinder Morgan. I like Energy Transfer. I like EPD. EPD out of those three is the one that I have. But I agree. I mean, energy is obviously pretty dang essential. So EPD and Chevron are the big two, or the two energy stocks in my portfolio. So yeah, growing companies are the best dividend payers. Absolutely, absolutely. So one of the things I look for, really, especially lately, I guess let me rephrase this. As I've continued to learn more about, looking at financial statements, which I still have so much to learn, but as I've learned more about this stuff and have learned, just kind of learned the ropes a bit more, it's just common sense. Like if the company's not growing their sales, if they're not growing their earnings, then at some point they're not going to be able to grow their dividend. So, and the thing is too, about growing sales and growing earnings, typically across a long period of time, I mean, those are the things that lead to an increased intrinsic value, and that's what's going to lead to a higher share price over the long run. So if a company's growing their sales and they're growing their earnings, hopefully the share price will follow suit over the long run, and you'll see some share price appreciation. But along with that, if they're a dividend payer and are committed to the dividend because they're growing these things, growing the earnings, growing the free cash flow, you should see dividend growth come along with that as well. So the two really go hand in hand. So this is a really good question. I know you only do dividend stocks, but what are your thoughts on options trading? I'm curious to know. So options is not, I personally don't trade options. Just I haven't taken the time to necessarily learn how to do it. I'm familiar with how it works for the most part on a very basic level. It's not something, once again, that I personally do. It's not something that I have much of an interest in doing. It just seems like I'd rather spend time doing other things than keeping up with options trading. But with that said, I know a lot of people, a lot of you guys watching right now too, trade options. My friend Wayne Nichols, who I was talking about earlier, Big Bad Wayne, he's a really big options trader. So if you guys like options, definitely go watch his channel, because he absolutely crushes it in options. That guy's making, between options and dividends, it's just ridiculous, guys. Like it's a full-time salary just from options and dividends every month. So if you guys want to watch some stuff on options and want to see, honestly, just a really a really cool, crazy portfolio, go look at Wayne's channel because he puts it all out there, and it's just really, really crazy to see what he does and what a lot of options traders do. You can definitely make some good money, but for me, it's just not something I'm interested in doing. Okay. Yeah, maybe someday. Maybe someday I will get into it more. And if I do, it'd be a cool thing to talk about here on the channel. Obviously, it'd be a great addition to what I already talk about on the channel. So maybe at some point, I'll sell some cash secured puts. Maybe at some point I'll do covered calls. I actually have a really nice cash, not sitting in my brokerage account. I have it in my savings account, but I actually have a really nice cash position right now that I've been working on building up. A lot of which I'm going to use for a down payment on a house, hopefully sometime this year. But then the other is just like savings. So that's kind of nice though. I'm actually at least for now, I don't know how much longer I'll have it like this, but over in the high yield savings account, I'm bringing in like close to $200 a month just from that. So it's almost right there with my dividend income, which is really cool. So I'll talk about some of these things here. So believe it or not, I actually do this YouTube stuff full time. So I do my YouTube channel full time. My email, my email newsletter that I put out once a week. I put one out yesterday. Goodness gracious, I'm sorry, guys. Everything I do for this channel and all this content creation stuff, all the dividend investing stuff you guys see from me, this is my full-time gig. And I am so blessed. I'm so fortunate to be able to do this because it's truly my favorite thing. And it's been a very surprising thing that's happened in my life. I never would have expected this would have happened, but it's been so awesome. And I'm just going to do this as long as I can because it is a blast and I absolutely love it. And I will do this as long as you guys will have me. And with that, thank you guys for all the support. Let's see. And as far as the salary goes, it really varies. It really varies. I don't want to get into the specific numbers. But I will say just in general, it's not like six figures or anything like that. But I would say I make a modest and moderate living doing this at this point. And I hope it continues to grow. But it's comfortable, and I don't have for me, it's comfortable. For other people, it might not be, but I don't have a lot of crazy expenses. My wife and I share a car. So we only have one because I really don't have to go anywhere. Whenever I go somewhere, we 95% of the time go together. So we haven't had a need for a second car for a long time. And so it's pretty much just like my main expenses are setting aside money for investing, groceries, a roof over my head. I have to, tequila for peanut. So stuff like that. I live a pretty low expense lifestyle, and it's not like something I try to do. It's just natural. Like I have very, very affordable hobbies. Like one of my hobbies is doing this with you guys, researching stocks, reading books. I started, I'll go grab it in a moment, but I started reading a new book the other day, working out. Everything I do is just like very, very affordable hobbies. The only thing I would say that I splurge on, or my wife and I splurge on, is like, and we really don't go out to eat that much either, but I'd say we spend maybe a bit more than, it's not even that bad, actually. No, I bet between the two of us, we're spending 100 to 120 bucks on groceries per week. So $50 to $60 per person on groceries per week. That's not bad at all. Anyway, what I was going to say is the main thing that we splurge on from time to time is like staycations on the strip. Sometimes like once a month we'll go do that. And that might be, if you book a room at the Flamingo midweek, you can get it for like $100. So that's pretty much it. Let's see. This is a great question. I'm actually going to make a video on this sometime in June. So how long is it going to take you to reach 100K in your portfolio with your current contribution? So yeah, let me actually screenshot this because I can probably include that in the video. Thank you, Kevin. one sec. Let me screenshot this. So right now the portfolio overall is at about 70K, right? And I'm investing about $12,000 per year. I want to increase that, but I'm holding off on doing so until we buy a house, until that's situated. Once that's behind us and once that's settled, once the dust settles from all that and we're like in that groove, I want to increase the amount that I'm investing, but I want to focus on the house for now. So at this point, annually, I'm investing about, $1,000 per month, $12,000 per year. So at that rate, I mean, just with the contributions, just with contributions, like 70K, 12, 24, 36, just not counting gains or dividends, it would take me 3 years from here, basically less between 2 and 3 years. But if things keep going the way they have been with dividends, and if I'm able to contribute a bit more to the portfolio, then it could happen potentially sometime in 2025. It could happen sometime next year. And we can crunch the numbers real quick just for fun, just a quick projection and take these with a grain of salt. So this is the marketbeat.com dividend calculator. If you guys have watched my videos, you'll undoubtedly have seen this in the videos. This is basically a tool that you can use, a free tool you can use that allows you to project the growth and project the future value of your portfolio. So if we're starting here at $70,000, okay, my dividend yield is about 3.8%. Once again, in case you missed me saying it, in case you missed me saying it earlier, in case you missed me saying it earlier, I think I said it. I apologize if I forgot. I thought I said it. The dividend income or the dividend stats on the portfolio tracking spreadsheet are on the fritz right now. So if you notice some of these are zeroed out on your end, don't worry. This randomly happens from time to time. The issue always corrects itself in a short amount of time. Like it might take a day, it might take a couple days, but it'll work itself out. So just hang in there. I just wanted to share that again. So my initial dividend yield is about 3.8%. My 5-year average growth rate across my entire portfolio is 8.3%. Let's say, let's just be a little bit more conservative. Let's just say 8. Okay. Let's say that this is always the tough part for me. I never know what to put in here. Let's say that my shares are going to grow by 7%. I really think it might end up being like 6%, but let's just say 7% across these next couple of years. Let's just look out the next 5 years, okay? And every single year, let's say I'm investing $12,000, so about $1,000 a month. Calculate that. And after 5 years, this is what it's going to look like. So after 5 years, we'll have about 188K, bringing in $7,600 of income. Not too shabby based on this. But according to this, guys, so end of year 1, so by this time next year, according to this, based on these inputs, I should be at $90,000. After that, so exactly 2 years from today, so May 2026, I should be at $110,000. So it's possible, it might be a stretch. It's possible that I could get there by the end of 2025. If not, sometime early 2026. That's what it's looking like based on these inputs. So, and that'll be cool. At that time, at 100K, you're bringing in some nice dividend income right here. So that will be cool. Very cool. Yeah. Anyway, good question. Yeah. Ryan is Chipotle's biggest customer. I love Chipotle, man. So, and you know what? Really, the only time we go to, I'd say actually not all the time, but I would say 90% of the time we go to Chipotle, we have either a gift card to Chipotle, or we have like one of those Visa gift cards. And that's pretty much the only time we go to somewhere like Chipotle. Same thing with In-N-Out Burger. I actually went to In-N-Out. I think I went to In-N-Out twice last week. And prior to that, I hadn't been in, I can't tell you how long, months and months. But I went twice last week. And the only reason I went there once even was because I had a gift card. A while back, we got these gift cards that were like, you could basically get a double fries and a milkshake with this card. So we used up those. And then I had got a gift card gift card to In-N-Out for Christmas. So I used that as well. But yeah, typically when we go out to eat at somewhere like Chipotle or In-N-Out or anything like that, I'm using a gift card. I don't want to, I don't like, I don't know. I don't really like spending a ton of money on that stuff. I'd rather spend it on like a staycation, to be honest with you, than Chipotle. So, and whenever like my birthday comes around or Christmas comes around, that's pretty much all I ask for is like Visa gift cards. Cause I know that we'll spend that going to, places like Chipotle or whatever, which we love to do. That's love doing it. But, so I'll ask for like Visa gift cards, books. I've got a extensive book list that I really need to hurry up and get through. And or like money for investing. Those are like the few things I ever ask for. So, oh, and I meant to show you guys. So I said earlier that I started reading a new book the other day. So I finished reading the book. I don't think I really talked about it much, but I finished reading The Great Depression, a diary, it was okay. It was basically a firsthand account of what it was like living through the Great Depression from the eyes of, and actually it was actually a guy's diary. He just had all these writings throughout the years from his experience living through that. And he was a lawyer in Youngstown, Ohio. And I don't know, it was kind of an interesting read, but the first like half of it, I'd say, was interesting. Then after that, I just wasn't interested in anymore. But anyway, now I'm reading One from Many, Visa in the Rise of the Chaotic Organization, which is by D. Hawk, who was the founder of Visa. Very interesting book so far. I'm only about 75 pages into it, and which is like a fourth of the way through. But so far, I'm enjoying it. I don't think I'll get a lot of takeaways about investing specifically from reading it, but I do think I'll have some. There will be some really good insights into Visa and some really good takeaways about that company that I can store in the noggin and put in the investor's almanac. So I'm excited to continue on with it. It's been really good so far. He's a really interesting guy. Let's see. Good question. So, and guys, it's about 6 o'clock. Usually we'd wrap up the stream right here. We'll keep going for a few minutes. I'm having fun. So Blaze asks, any thoughts of adding a railroad? So I've thought about it before. Excuse me. Russ was texting me. I thought about it before, and there was a moment where I was looking into Norfolk Southern, and I like the idea of having a railroad, but I recently, and I talked about it in a recent video of mine, I've been really liking Old Dominion, OD, and I wrote about it in the email newsletter that went out yesterday. I really like Old Dominion, which is a trucking company. So I think they're maybe like the third largest trucking company here in the United States, and they specialize in what's called LTL shipping, or less than truckload shipping. So instead of just taking something from point A to point B for one customer, one full truckload for this one customer, Old Dominion will basically stack shipments, less than shipments that are less than a full truckload. So they'll stack maybe 2, 3, 4 different shipments in one truck and transport it through their distribution network, which is their service centers, which are located all across the country. And it's just a different way of doing shipping. And I think I've been trying to think a bit more through this company and this industry, because it's not one I'm super familiar with. But when thinking about it and thinking about LTL versus like full truckload shipping. So in taking a little step back and zooming out a little bit, one of the competitive advantages of like a railroad company is it's really hard to lay down new track. You're not really going to build the infrastructure out to develop new track and new railroads. So it's a really hard market to get into. It's really capital intensive. And trucking or freight in this manner doesn't have those same barriers to entry. It's a lot easier to just buy a truck than it is to build a whole railroad, right? But there is a bit more of a barrier to entry when it comes to this LTL, because you have to have, it's not just going from point A to point B. You have to have this distribution network, or else it doesn't really work. And so Old Dominion, that's one of their competitive advantages, is they have this extensive distribution network throughout the country. They have 260 service centers across the country. And they also have very very high customer service, very high customer satisfaction. I mean, very low, like 99% of their 99 point something percent of their shipments are on time. Less than 1% of their shipments arrive without any issues. And so overall, long story short, it looks like a pretty solid company. And it's seen a drop. Like in the last month, Old Dominion's down 4%. Year to date, they're down 13.5%. The financials look really good. This company's profits are expanding over time. You know, gross profit margin went from 30 to 40 in the last decade. Operating margin almost doubled in the last decade. Net income margin, you know, going from 10 to about 20 in the last decade. So all that looks really good. Buying back shares pretty consistently. Okay. Dividend growth has been tremendous. They've, look at this, guys. Since 2017, it's gone from 13 cents per share to almost 90 cents per share, while the payout ratio has stayed less than 20 this whole time. So it's looking really good. And the balance sheet's pretty nice as well. Like very low debt to free cash flow, actually negative net debt now that I'm looking at this. So I think this company is checking a lot of boxes for me. And if there's something that I would consider close to railroads, it would be, I would sooner consider something like Old Dominion than I would something like Union Pacific or Norfolk Southern. So, and trucking too, like trucking ships transports so like a much higher volume and tonnage of goods than does a railroad across the country, which was actually surprising to see. If you guys want to learn more about this too, I talk about a lot of this stuff in my most recent newsletter. I should have linked it in the description, but I forgot. But if you go to my website, which is just retirewithryan.com, front and center, you'll see something that says, I'll just show you. Front and center, you'll see this right here. This says read the latest edition. If you just click that, it'll open this up here. And so here I tell you all about Old Dominion. So definitely check that out if you're interested to learn more about the company. Really, really cool company. And I know some of you guys have been buying it out there too. So let's see. Let's keep going. Let's see here. Yeah, there you go. Adon, shots. Ryan brought out the book. Exactly. Exactly. Gosh, this stuff is so good. 0 calorie too. This is a really great question. I feel like this is one I get a lot. I'm actually going to save this one too. This would be good to talk about in a future video. Thank you for asking. So David wants to know, how many stocks should a person keep in their portfolio at one time? I'm diversified, but how many stocks is too many? You know, it's really tough for me to say. There's no magic number for diversification. And I think it depends a lot, not a lot, but I think it depends on a few different factors. Number one, I do think the size of your portfolio plays a role in how many stocks you should own. And there's certainly going to be different schools of thought on this, but I'm of the opinion, especially when it comes to being a dividend investor and especially as you're closer to retirement and are maybe in a position where you're starting to use some of the income that your portfolio is throwing off. I'm of the opinion that if you're at that stage, it makes sense to have a more diversified portfolio. I just think it's a good defensive move at that stage in the game. The last thing you want is for your income to take a dramatic hit. And one way to prevent against that is to have a wider, more diversified group of holdings. So having said that, on the other hand, when you're just starting out, I don't think you need to have, in probably in most cases, other than the one I just mentioned, I don't know that it makes sense to have 40 or 50 or 60 different stocks as some do. I mean, if you own an ETF like SCHD or even the S&P 500, that's like a different story. But if you're just buying individual stocks, if you're just buying individual stocks and you're kind of towards the beginning end, or even if kind of the intermediate in your investing journey, I don't think you need 40 or 50 or 60, you know. Personally speaking, I have about 20. I have 19 individual holdings. And I even think at my stage in the game, you know, 70K portfolio, I think that's probably a bit much. And I think if I was to narrow it down and to give myself a sweet spot number of holdings right now, it would probably be probably somewhere between 13 and 15. And as time goes on, I'm starting to see the ways that I can consolidate a bit more in my portfolio and maybe lean into some of the higher conviction holdings. But with that said, too, a lot of people when they do, and this is going to be a tangent, sorry, but a lot of people too when they first get into investing cast a really wide net because you think you need to own everything. You see, especially if you start off and get into this by watching YouTube videos where people are talking about, you'll hear about 100 different stocks a day if you watch enough videos. And if you're someone who's just getting into their, just starting to build their portfolio, you take all that stuff in and think you need to cast a wide net. This was the case for me when I first started. I think I maybe loaded up with like 30 different positions. Too much, way too much. And I do think if you are someone who's just starting out, probably the most prudent approach is just to go with like ETFs, just to walk before you can run, just to start getting some skin in the game and to start, experiencing the daily movements of the market. And then from there, if you get that itch, if you absolutely have to and want to explore that, then maybe start working in some individual stocks, but do so one at a time, or maybe two or three at a time. If you're someone who's just starting out, like a perfect balanced portfolio between individual stocks and ETFs, I think is like one ETF. You could even do two. You could do like SCHD and VU. You could do SCHD and SCHG. You could do DGRO with either of those. There's different ways to slice it, but I think you choose one or two good ETFs. And if you need to have some individual stocks and you want to try your hand at that, maybe pick three, three that you understand and pretty well. And maybe start learning the ropes and learning what it takes to research a company and use those as practice to start learning how to read financial statements and learning some of these things that you'll inevitably have to learn if you're going to continue investing in individual companies. You can use those as kind of like your training wheels of sorts, if that makes sense, or your test dummies. So, and I know I'm not giving you a strict answer because it just so depends. It just so depends. And one other variable to consider too is like, how many stocks can you keep up with realistically? If you're buying individual companies, you want to be in the loop on what's going on with them. And some will require more attention than others for sure. Like this isn't a dividend stock, but like Tesla, you're going to have to pay a lot closer attention to what's going on with Tesla than you probably would with like Procter and Gamble, right? So part of it depends too on how hands-on and how much attention you can pay to the holdings in your portfolio. So, and I think as time goes on and you start coming into your own and spending some time in the market, you'll naturally come to know where that sweet spot is for you. You'll inherently come to just have a sense for how many holdings is too many, or if you don't have enough or whatever. So hopefully that all makes sense. I know that was once again kind of a tangent. So let's keep going. Let's keep going. We'll do a couple more comments here, then we'll hit the road. We got A-Rod in the building. What's up, Alex? How you doing, man? So Ingo, you said you evaluate / roast portfolios. I wouldn't say that I roast portfolios, but yeah, this month, a couple weeks ago, I started a video series. I was just trying it out, where I review some of your guys' portfolios, and had a lot of really good submissions. I think so far I've got like over 70 people who've submitted their portfolios, which is crazy. And if you want me to potentially review your portfolio, there's a link in the description of this video to submit your portfolio to be reviewed. It's just a quick form, just to gather some like a little bit of background information on you, just so I know where you're at in your investing journey, and a link to where one can see your portfolio. And it's all laid out in the form. But yeah, definitely check that out, and I can I'll consider putting it in a video for sure. Like I said, I've got a lot of submissions, and I think I'm going to do like 3 per video. So yeah, and I was really happy to see you guys. I got a lot of great comments on that video, so I was really happy to know that you guys enjoyed that, and it was really fun for me to make as well. So I think, at least for now, that's going to be a monthly recurring video series. So Mark says, why ETFs and not mutual funds? I still can't find a good explanation. I mean, you could just as well invest in mutual funds. Um, that's totally fine too. I think the main difference between like ETFs and mutual funds is ETFs, you still have like the daily price fluctuation. So you can still see the price change, the share price change in real time versus that where that's not the case with mutual funds. But I mean, for the average investor, I think they're going to be pretty similar in nature. So yeah, I think either way is fine. Let's see. Hmm. Yeah. Classic Charlie Munger quote, sit on my butt investing. Yeah. Yes, yes, yes. Yeah, some good comments about ETFs versus mutual funds too. Thank you guys for jumping in there. It's 6:15. Any last comments, any last questions before we call it a night? This is a really fun stream. This is awesome. I really, like I said, I really missed doing it last week, and I don't know why this happens. Coming into it, you get a little stage fright sometimes. And I was thinking, gosh, dude, I haven't done this for a while. I'm off my game. I'm gonna suck. But it's always fun. I really always enjoy doing these streams. So yeah, excited for mid-year's dividend palooza. Absolutely. I think Creed is going to be headlining this year's dividend palooza. I think I heard that with supporting acts of who are the supporting acts. We've got Creed headlining. We've got Limp Bizkit also coming to Dividend Palooza this year. We've got Under Oath might make an appearance. That'll be cool. We've got Cypress Hill actually coming out. We'll have Be Real up on stage. So solid lineup for this year's Dividend Palooza. Yeah, Adam, would have liked to connect before the trip, but been very hectic. I know. I know. We'll definitely get together when you get back. And we kind of talked about when Adam and I got together, we met up at Juan's Flame and Fajitas of all places. We talked about doing like finally doing some sort of in-person dividend happy hour. So Adam, when you get back, I'd really like to make that happen and start doing that maybe once a month or something like that. I think that'd be fun. So we'll get that figured out. So yeah, Coach Tim, where's the Drip and Sip meetup this year? It's Vegas, man. So that's what I want to do. And I've talked about it. I've talked about it for a while now, wanting to do this, some sort of in-person dividend happy hour. And if we do it once a month, if it's like a monthly recurring thing, that I will definitely open it up to basically the public. So just basically blast it out there. This is where we're going to be. This is when we're going to be doing it. And a lot of you guys come to town. A lot of you guys come to town sometimes. So if you're ever in town, you could make a meetup and whatever. It'd be a lot of fun. But I figured it'd be just a fun thing to do to get together, get some other local dividend investors, or anyone visiting too. Get some dividend investors together to, I don't know, just hang out. A lot of us don't really have like people in our real lives that we can talk to. Not a lot of people. This is a very niche thing. Not a lot of people are interested in this stuff. So it'd be cool to start doing some in-person stuff and get people together. So, ooh, Lamb, I'll be in Vegas next Tuesday. Nice. Very nice. Where are you staying, Lamb? I'm going to be flying back home tomorrow to California for a few days. I'm going to leave tomorrow night and come back Tuesday evening. So, yeah, thank you guys. Zal said, I really want to come celebrate your first 100K, whether it be portfolio or subs. Man, I know. Well, Zal, if and whenever you can make it out this way, man, we'll definitely we'll absolutely get together. So, oh, okay. Lamb, Resorts World coming from Laughlin. Are you staying in Laughlin or you live in Laughlin and you're just coming to like the strip for a night or something? But yeah, Zal, man, that would be really fun. That'd be a lot of fun. So I think I definitely could see first 100K in the portfolio happening sometime next year. And some of it depends too, like with this house thing. I really just want to see, like, number one, how much we have to put down for that. I've got most of the down payment ready to go, but I just want to keep saving. So if there's some leftover savings from, like, maybe we just don't end up spending as much as I think we will going into it, maybe I put that in the portfolio. I still have, like I said, I've still got a decent cash position that I could deploy into the portfolio, but I really like having more of a, I guess, a sort of emergency fund, just because my income does fluctuate. I just feel better having that cushion. So I don't know that I'd want to put that into the portfolio, at least not all of it. So we'll see what happens. I definitely think that at this rate, I definitely think 100K in the portfolio will happen before 100K subscribers does. But you never know. This YouTube game is it's such an interesting thing. You never know what can happen. Oh, live in Cali, Laughlin river trip. Nice. There you go. We'll make this, I think, the last question before wrapping it up, guys. So John says, why did you leave Sacramento and go to Vegas? If we may ask, is it better real estate? Yeah, it is. It's actually pretty comparable to where I lived in California. The real estate pricing is, but there's a few reasons why we moved out here. Number one, my wife and I, we would always come to visit. We'd always come to visit Vegas. Like, we'd come out here probably 3 or 4 times a year because we absolutely loved it. And it's funny because neither of us are like really big partiers. I mean, I like my occasional margarita and stuff like that, but we don't really like going out to nightclubs. We don't really like doing that sort of thing. We don't really go out to the beach clubs, spend money buying bottles and stuff like that. We don't really gamble either. So we just really have always liked coming here, staying on the strip, eating good food, walking around. One of my, still, even as a local, a lot of locals don't like going down to the strip. Still, one of my favorite things to do is like go down to the strip, go to the Mojito Hut, get a big 32-ounce margarita, and just walk around. Just walk around the forum shops, walk through the casinos. That's still one of my favorite things to do. And anyway, it was the thing. Every time we'd go home, like, we'd be on the plane back to Sacramento, and we'd think, God, like, we already missed Vegas. And so that was one of the things that really made us consider moving here. And my wife also works in that industry. I mean, I said we don't really go out to nightclubs. We don't really do that. But my wife works in that stuff. She works at Dre's Beach Club, which is at the Cromwell Hotel right next to the Flamingo. So she works in that. So it was like, it made sense to come out here so she could do that in probably the best place in the world to do it. And also, no state income tax here in Nevada. So definitely save a good chunk of change there. Otherwise, like, I mentioned the real estate's pretty comparable to where we lived in California. But otherwise, like, cost of living is lower here compared to California. And it's just nicer. Like, Vegas is just so much nicer. I mean, you've got your pockets for sure, but in general, especially our side of town, is just so much nicer than living in Sacramento. Like, even we lived in a pretty decent part of Sac, and it's just so much better in Vegas. I would say living here has exceeded our expectations in every single way. So those are some of the reasons why we ended up moving to Vegas. And obviously, just doing what I do, I can pretty much go anywhere. So, yeah, it's been nice. Been really nice. Anyway, guys, yeah, I think this is a good place to wrap it up. Almost an hour and a half, long stream tonight. I guess I kind of had to make up for it a little bit since I wasn't around last week. So Striper Kid moved from New York to North Carolina for the same reasons. Yeah. Yeah. I love it here. Absolutely love it here. It is funny too, though. I'm always surprised. I'm about to go on a little Vici Properties tangent. So this might have been Saturday or Sunday. I went down to the strip. My wife was working, so I dropped her off, and then later that day came back down to the strip to pick her up, but came a little bit early just beforehand to do my thing. Like I said, get a couple margaritas and walk around. And so I was just having myself a good time, just walking around, cruising through the Cosmo, cruising through Bellagio, owned by Realty Income, 20% owned by Realty Income, cruised through Caesar's Palace. And this was actually, it wasn't even a Sunday. It might have been Monday. I think it was Sunday actually. But anyway, packed, completely packed with people. And every time I notice that, and I watch a lot of Vegas stuff too. I watch a lot of Las Vegas content creators who will do room reviews, restaurant reviews, buffet reviews. They'll do live streams where they do what I was just, they'll do live streams where they just walk up and down the strip. And I put that on as like, it's just background noise. If I'm cooking, if I'm doing work stuff and just want something on, I'll find people live streaming and just put that on. Every time. It could be a Tuesday afternoon, it could be a Tuesday evening. The strip is packed, jam-packed. And every time I see that, I'm like, gosh, this is just like, I need Vici. I need to have Vici properties in the portfolio. And I also watch, there's one guy that I watch in particular, Jacob's Life in Vegas, really great channel, one of my favorite Vegas channels. And every single month he'll put out like the news and updates for Las Vegas. And with that, usually he'll talk about average price per room, average room revenue, both on the strip and downtown on Fremont Street, gambling revenue. And he'll talk about the year over year growth every single time. Room revenue's up, gambling revenue's up. And I'm just like, gosh, I just have so much reason, so much like empirical and statistical reason to think that, yeah, Vegas is, very bullish on the city. And so when I take stuff like that in, I just think, yeah, it's got to have some Vici properties in the portfolio. So we got Dave in the building, another Vegas local here. Thank you, Dave. Yeah, absolutely love Davis, man. Or Davis, absolutely love Vegas. Hope you're doing well too, man. Let's see, Wacho, or maybe Waco or Waco. How often does this happen? Nice little chat. New and future and past investors. Absolutely. So I do this every Friday night. So Friday nights at 5 p.m. Pacific time, 8 p.m. Eastern time, we do the Dividend Happy Hour. So this one's an exceptionally long stream. Let's just go another 3 minutes. Let's just make it an hour and a half. Oh goodness, guys. But yeah, usually we just run it for an hour. So, but we're going long tonight. So long and strong. Yeah, so Foot Locker. Anyone have something on Foot Locker? So I noticed some interesting movement on Foot Locker. Let's take a quick look at it. Which they're not even a dividend payer anymore, right? Like they completely eliminated their dividend, yeah. But I noticed some interesting movement on Foot Locker this month. Really big jumps. So they must have beat earnings expectations. Yeah, they did. That's what this jump was. You know who else beat earnings expectations? Abercrombie and Fitch, which is A&F, I believe. Okay. No, not a dividend payer either, actually. So, but they beat earnings expectations. This company is up 460% in the last year, which is crazy. I don't really understand it. Upbeat outlook, okay, fine. But what is like, this just doesn't seem like a company. It's just the 2 and 2 don't, it's just not computing for me is what I'm trying to say. I just don't really get it. Don't really get why such a substantial climb. Maybe perhaps part of it's because the year over year net income was so much higher. The earnings per share were so much higher, basically 100x compared to 2023. So that's probably it, but I don't know. And another one too, Gap, guys. Gap actually really jumped out of the 3 that we just looked at. They're the only dividend payer, but still it's like they recently cut their dividend. They've got that negative 9% growth rate. And I love the Gap. I buy a lot of clothes from the Gap. But still, this is just not a company whose financials I look at and I think this is like, yeah, this should be up 30%. This should be up 260% in a year. It just doesn't really make sense to me. I don't know. What are you going to do though? Nike did good today. What did Nike do? Yeah, up 1.7%. Yeah, up 3% for the week. They're still close to their 52-week low. Year to date, they're still down 12.5%. So could be a good time to pick up some shares of Nike, I guess. Um, yeah, guys, I know I said it already a couple times, but I think this is going to be where we wrap it up. I think this is going to be where we wrap it up. PJ, man, I'm sorry. You're asking me about ITW. It's a good time to buy ITW. Just real quick. I really don't know. I really don't pay attention to this company, so I'm not sure. I'm probably not the right person to ask about it. But let's look at it. We'll look at a few quick, like, relative valuation metrics to maybe see if it could be a good time to consider it. So ITW up 11% in the last year. Okay, they're pretty flat for the month. They're down. Can't talk. They're down 7.33% year to date. So okay, little bit of a pullback so far in 2024. If we go look at the valuation metrics, the forward PE ratio is about 8.5% below the 5-year average, still considerably above the sector median. But below average compared to its historical self. Price to cash flow, same thing, 13.5% below the average. So that could be a good sign. Looking at the free cash flow yield, this is at 4.4%. That's not too shabby. That's definitely not too shabby. And the dividend yield right now is pretty in line with the 5-year average. It's only 1.2% above it. So I think now could be a reasonable time to buy Illinois Tool Works. But once again, I really don't know much about this company. It's not one that I follow very closely. So, and those are just, relative valuation, just kind of what we looked at is only one way to maybe possibly gauge the valuation of a company. But otherwise, just looking at some of the financials, gross profit margin's not bad. The operating margin's growing. That's good. Net income margin's pretty stable. And it does look like it's trended upwards overall over the years. Earnings per share going up, buying back shares, solid dividend growth. So yeah, I don't know. This is probably a fine looking company. It does look like the payout ratio is slowly but surely trickling up. So this is something I would keep an eye on. It's not in a bad place by any means. It's only at about 50% or so. So that's really not bad, but it is trending up over time. That is just one thing to keep an eye on with that company. So anyway, guys, yeah, we're gonna call it a night here. But I want to thank you guys so much for hanging out with me this last hour and a half. This was a lot of fun. It was good to be back. As far as I know, I don't have any reason why I'll be unavailable next week. So we'll plan on having a stream next week, as we do most weeks. But my wife might be home. Maybe not. Anyway, guys, thank you so much for a lot of fun tonight. This was a great time. And I hope you guys have a fantastic weekend. Be sure to tune into Sunday's video too. I got my portfolio video coming out on Sunday, or portfolio update video coming out Sunday. Pretty good month decent month in the portfolio. I go through some interesting stuff in that. So definitely tune into Sunday's video. And I hope you guys all have a fantastic weekend. Stay safe, and I'll see you in the next one.